when you got the right tools and you know how to use them, you can make a fortune. So just to recap my commission earnings for January 9th, it's going to be a little bit of a lag in the time of this video coming out, but essentially I made about $160 between two clients, about 2.5 hours worth of work. The first one was a business lending meeting. The other one was more of a discussing savings options meeting. So starting with the business lending, this one was pretty interesting. This client is a photographer, pretty young, early to mid 30s. She's been probably in the field for a while, but actually operating as a business for around 4 years. She came in looking for capital to, catch up with the business she's been getting, and needed some better technology. Essentially, she needed better equipment. She needed better cameras, lenses, etc. So she's been banking with us on the business side for, that entire time that account's been set up or her business has been established. So she came to us first for, capital options. So my first approach was, learn a little bit about her, a little bit more about the business, and then start to take that information and pair it off to what might be available to her. So I started to probe some questions, a little bit more about the business, how long, revenues, more about her personal finances, personal income, personal credit, etc. Gathering this information. So just to throw out some data points on her. Again, the business has been around 4 years. This will be her first year filing tax returns for the business. So she didn't have really any financials for the business, but she did have an established bank account with us for some time. So that's a great data point in her favor to kind of compensate for not having financials. The information that is being viewed or the story being told with financials for banks is really hidden in the bank account. So that may have helped her out some because she was only looking for around $15,000. So no financials, established business banking relationship. Based on her guesstimations, essentially, she estimated somewhere around $50,000 in revenue, which is pretty good given her situation. And personal credit wise, she said, I have perfect payment history, but my utilization is rough. So that was kind of a glance at that. I didn't actually look into her credit profile per se and have her pull it up. She didn't have a personal relationship that would have allowed me to be able to see her personal profile or have her log in to see her personal credit information. So I had to go off a word of mouth with that situation. She had some questions about what was the minimum credit score requirements and things like that. So we discussed, based on the fact that she had what she had in revenue, she worked at the post office, so she had a stable W-2 income, her income from her photography business, and she had rental income from a rental property. So those were good. I found out that totaled around $140,000 or 140 plus in personal income, gross annual income. So that was really good. So reasonable credit, good personal income, reasonable revenues, business established more than a couple years, no financials yet, but established business banking relationship. I explained to her that the tier levels of underwriting on business lending products. Business credit cards are the easiest. Business loans and lines are going to be, vary from moderately tough to extremely tough if you're going all the way up to like SBA lending. So I explained to her, listen, at the amount you're looking for, we can try for a line of credit or a loan, but that's going to be tougher underwriting because you have an established banking relationship and you're only looking for around 15 grand, which is around the minimum we'll do for an application, 15, 20, 25 grand. I said, listen, there's a chance you can get approved based on your personal credit, your income, and the insight or the look in on your business banking relationship and how you've managed that account. Now, mind you, she had some charge-offs on the personal banking side in her history, and she didn't have a ton of money sitting in balances in her business checking account. So fast forwarding with all those data points, I explained to her what her options would be, her likelihood. We landed on a business credit card to start because she didn't need all of that 15 grand at one time. She needed access to capital, in durations over time. So I'm like, look, let's get started. Even if you get a few $1,000s on a business credit card, let's get that, grow that, and get you access over time to get you the equipment that you need. She agreed. We applied, and boom, she was approved. Her first business credit card, $3,000 limit. Cool. Let's get started with that. I explained to her how to use it that would enable us to be able to go back for a credit limit increase relatively soon, maybe 60 to 90 days out. So she got approved for the 3,000. I told her, look, use maybe no more than 50%, or at least put yourself in a position where you can pay at or pay it down to or below 50% on balances that you carry on that card. She had 0% for 12 months. So that was going to keep her from paying any interest. And I gave her I told her, look, stick with me. I'll get you an exit strategy out of this before the interest kicks in. So that was that client. I got paid $75 for that business credit card once she activates it, of course, when she receives it. So that was solid. The next client was going to be the savings discussion. This lady came in a few weeks or a few days prior this week saying that she had some excess capital, not a ton, but enough where she wanted to discuss maybe CD options or something else to make some earnings on her money. So I got that appointment set up, sat with her as of the time of this recording yesterday, and she had about $30,000 in the savings. So same thing, gathered information on her, fact finding, so I can also plug in her options. I asked, where's this cash from? What's the timeline for this cash? Is it earmarked? She's like, no, this cash is just excess savings and surpluses that I've accumulated, and I don't have it earmarked for anything. It's just general savings. Cool. Is your income stable? Tell me about your income. Yes. I've been in my job for a little while. I make around 70 plus a year. She's 52 years old. What's your retirement look like? Oh, I just started my retirement kind of my job about a year, in the last year or so. So we'll assume maybe she has four figures in that account, next to nothing. Okay, great. Do you have any other vehicles that are going to help towards retirement? Rental property, etc. Well, I own my home, no rental property. I live with a domestic partner, boyfriend, whatever, and my mother, who has a decent retirement, but I don't count her income into my household because I don't really have her, covering any bills. Okay, cool. So she has next to no retirement set up. She's 52 years old, $30,000 in cash, and I asked, do you have any other cash anywhere else? She says no. Okay, cool. Well, she wanted to do a CD and maybe keep a little bit of cash in savings. All right. So I explained to her, look, she said her mother has life insurance, assuming that she passes away. She has a decent set of policies and legacies she'll pass down that will aid in her retirement, assuming that goes the normal way and she outlives her mother and her mother doesn't live for another 30 years or something crazy, which I'm not wishing death on the lady. I'm just saying from a financial point of view, if her mother's, I believe, in her 70s, her mother passes away anywhere around that normal window of time of somewhere in the 70s or 80s, while she's in her late 50s or 60s, that will be part of her retirement plan, is the insurance policies, okay? So she has nothing outside of the insurance policies and Social Security that she can rely on, and whatever she starts to accumulate in her newly established retirement plan in her job. So you have $30,000. My breakdown for her was like, listen, I understand you explained to me you're new to investing. You don't have any, background or understanding with investing. So all you can interpret and understand is something like CDs. You're ready to make a better return on your money, but you don't know where to start, and you're not a big risk taker. You're not educated in that arena. Cool. $30,000. You basically break down at, the cash reserves for you, somewhere around $10,000 or $15,000 in cash is good for you for emergencies. That leaves us somewhere around, $20,000 or $15,000 to play with. Cool. $10,000 or so in cash. She ends up landing on $12,500 in cash. We do another $15,000 in savings, and I get her to take $2,500 and start an online investing account. You need to get started now, man. You're 52. You plan to work to somewhere between 67 and 70 years old. Your Social Security calculations are coming out to around $3,000 a month, but that's assuming you've been working that whole time, which I don't really know for sure, and your contributions that whole time. So you have no retirement security other than maybe your home being paid off by that time, and whatever life insurance your mother leaves behind if she passes away during that window of time prior to retirement. You need to get started. It's possible to get to six figures if you start now. So we talked about it. She felt comfortable enough. We got that open and established. I helped guide her into a decent index fund that I know will perform relatively well, or has performed relatively well, and has all of the makings to continue to perform well, which in this case, when my clients are brand new, usually I'm landing around the S&P 500 SPY index for them. So in that case, we agreed. I showed her the expense ratio on that. I showed her how it's performed the last 20 plus years. She was comfortable with it. $2,500 there. I explained to her, if you ride this out, we did an actual brokerage account. We didn't do an IRA with it because I didn't get to talk to her about any tax implications. We did a regular brokerage account, $2,500. If you can ride this out to somewhere around 67 or 70 years old at the age of 52, maybe make some consistent contributions to it when you have it to do and let it do its thing, you can breach past $100,000 in this account. It's extremely realistic. It's not going to be a ton of money in retirement, but if you have a reasonable Social Security, if the life insurance factor kicks in and your house is paid off, and you have $100,000 to $150,000 in this brokerage account, you can be in an okay place at retirement. You're not going to be able to live a massive dream life, but you'll be in a reasonable place. That account was $75 for setting that up and getting it funded, and another, $7 to $10 for setting up a long-term planning tool online that will help her track for retirement. So about $160 yesterday. Solid day. I got an excellent opportunity to help 2 clients advance their financial goals and financial means through some great education, great meetings. They were open-minded and willing to listen to the guidance. I made some pretty good money on top of my salary. That's the recap for January 9th. Comment down below. Let me know what you think about those interactions. Let me know what you think about the commission earnings on top of my salary. And let me know your thoughts overall around where you are with your financial planning. Are you working with a banker or not? If you can relate to either one of the scenarios I laid out in this recap. Other than that, to all my pioneers, welcome back. To my new viewers, welcome in. As always, I want each and every one of you to stay focused, stay in motion. I'll see y'all soon.